Hey, this is Casey Lown of Strategic Mortgage Solutions. I want to share with you 10 things to not do when you are thinking about applying for a mortgage. Number one, don't change your job, or at least don't change it without consulting your mortgage advisor. You'd be amazed at how many deals get killed because somebody changed their job and didn't tell their mortgage advisor about it. Number two, don't apply for any new debt, whether it's a car loan or credit card. Anything. When you apply for something while you're in the midst of getting a mortgage, lenders are monitoring your credit. If they see a credit inquiry, they're going to ask about it. If that inquiry led to you getting a new debt, they're going to want paperwork about it. If the paperwork shows that the new debt is of such that it now makes it to where you don't have enough cash flow to qualify for the mortgage you're applying for, your deal's killed. Number three, don't move money from one bank to another bank while you're in the midst of applying for a mortgage without talking to your mortgage advisor. Now, $5, $10, $30, sure. $5,000? You better call your mortgage advisor. Baked into the underwriting guidelines are requirements for lenders to monitor against money laundering and fraudulent activity. If you have a really large deposit come in or money transferred from one source to another, they're going to ask you for paperwork to source where that money came from. The less paperwork you have to provide, the better. So before you move any money, talk to your mortgage advisor. And four, even if your realtor or a great friend recommended you to talk to their awesome mortgage lender, you're going to want to get at least a couple more mortgage quotes on top of that. The reason being is that different lending institutions may have different programs available to you that other ones don't. These same lenders may also offer you rates and fees that are different for the very same program that you might qualify for already with one different lender. I mean, you shop for car insurance, shouldn't you also shop for a mortgage? 5, be careful how you utilize your credits you already have. You'd be amazed when somebody charges up their credit card. As you charge that sucker up, that can affect your credit score and bring it down. How you utilize credit and how it affects your score can affect the terms of the mortgage that you get from that lender. 6, be careful about the deposit activity you make within your bank account. If you are getting a gift from, say, your grandmother or your parents, before you deposit that money, contact your mortgage advisor about it. Reason being is that I've seen it where somebody gets a gift from a grandparent and the lender is going to require, because of the nature of the mortgage program they have gotten approved for, that grandparent's bank statements to source that the money came actually from grandmother. What if they don't want to provide those bank statements? So having an advanced conversation to any large deposit activity is really crucial, so that way you understand what kind of paperwork is going to be required from you and the donor of that gift. That way you can make sure that runway 12 is clear for being able to produce that paperwork when the time comes to apply for that mortgage. 7, make sure you fill out the mortgage application at the time of pre-qualification accurately. Try not to fib. Be sure not to forget any pertinent information as it may relate to your job history, your income, the assets that you may have available for a down payment. Any question that it asks, if you have any concern about how you're going to answer it, talk to the mortgage advisor. See what they would recommend to put on paper for you. So that way, it's not a situation of garbage in, garbage out, and you got turned down for the loan. Number 8, don't co-sign for any of your friends or family member while you're in the process of trying to get a mortgage. Whether you're co-signing or you are personally applying for a debt for yourself, it's almost no difference. If you have a brother, a sister, a daughter who just had a car breakdown and you need to be a co-signer in order for them to qualify for that new car loan, don't co-sign until you talk to your mortgage advisor. So many deals have gotten killed because of somebody being nice and co-signing for something. 9, don't change banks leading up to or in the middle of you buying or refinancing a house. When you open up a brand new account, that bank's not going to be able to provide you with much or any paperwork or statements related to the activity of that bank account for, it could be a couple weeks, it could be a month or so. Most mortgage lending institutions are going to require you to produce bank paperwork. If you just opened up a new bank account and deposited all your money in that account for that you've saved for your down payment, it could create some extra hoops and paperwork nightmares that it'd just be better to avoid until after the loan closes. And lastly, number 10, never not consult your mortgage advisor if you're contemplating any significant changes in your financial, credit, or personal life. I'm not saying, hey, I'm thinking about breaking up with my girlfriend is something that you should consult your mortgage advisor about. But again, there are certain aspects of your financial life that if you made a significant change leading up to applying or in the middle of you trying to apply for a mortgage, it could adversely affect you situationally on how you could qualify for the said mortgage. So, think of that mortgage advisor as somebody that's not just helping you get a loan, but they're also your consultant as it relates to matters of debt, credit, income, and your financial well-being. Anyway, I hope you enjoyed this video. If you're somebody that's thinking about buying a house or refinancing, hit the like button or the follow that's below this video, so that way you can see other videos that you might find informative and engaging as it relates to mortgage financing. And thanks for watching.